Hey, I'm Maike. Welcome back to another video. I hope you are doing well. Today, I want to provide you with a bit of a market update. We have a look at the indices for America, Germany, and Australia. After that, we're going to have a quick look into one of my investments, which is Zip. They released their financial quarterly update just last week, and that looked very positive. So we look into a couple of key facts there. And after that, we have a look into the best and worst investment in my Australian portfolio at the moment. And I tell you already what it is. That's Xero, and it is Megaport. And we have a quick look at the chart and we see how I did with those investments so far. As always with those videos, the quick disclaimer, you can read it in the description box below, or I read it out for you at the end of the video. And yeah, let's have a start and look into the different share markets and how they have performed over the last 12 months. Let's start with the US, and I'll make the image a little bit larger so that you actually can see what's going on. The American market has certainly performed really well over the last couple of months, and it has fully recovered from what was a downturn in March from the pandemic. And you can see it has even created new highs, and we are on new highs in the S&P 500 and also across the other indices in America. And obviously outperforming everything there is the NASDAQ, the technology index, even though it was a little bit on the lower performing side over the last couple of weeks. However, the American market is performing really, really well, and the uptrend somehow seems unbroken, even though you see that, the economy seems to slow down a little bit. All the uncertainty that comes with the current second wave of corona cases. Australia is luckily in a position that we have very low cases. The summer is here, so this might have helped us. But also we had the second wave very early, especially in Victoria. And we are now for almost 30 days, I think 29 we are up to, 29 days without a case, new case in Victoria, which is pretty good. Still, my thoughts are with all the other countries where there are still a lot of new cases every day. So we hope we'll get it under control at some point. But yeah, looking into the other markets, they certainly seem still a little bit more affected than the American market. Looking at the German DAX, the 30 largest companies in Germany, we have not yet achieved to run into new highs, and we have somehow set at a level at around the 13,300 mark. Today is another day where we jumped out of that zone. So on Friday it was already we jumped over that line really just a bit, and today a little bit more. So it looks positive for today, even though the Australian market was down today, and also Asia, their markets were down today, but Germany is starting in the greens today, so that's very positive. But it's very interesting to see what happens over the next couple of days, because we are potentially either breaking out of that support line, and then we can actually go for some new highs in that index, or we're going to see more uncertainty and we fall out of it again. And at the moment, it's really interesting to see how it will develop over the next couple of weeks before Christmas. Always hard to see, and it's certainly moving away again from the value, more into the technology stocks again when you see the American market. However, all stocks had gains at the end of last week, so the market there was going really strong. So it's going to be interesting to watch. The Australian market is still a little bit further away from their highs. However, the last couple of weeks in Australia were very, very good. So the indices performed very well. And I think it's due to the situation that we have less cases now over the last couple of weeks and months, and the economy is recovering. However, there are still restrictions in place, and I believe that Australia is overall still suffering from the overall situation. And especially the banks who are playing a big part in that index, they obviously have not performed so good, and that's why the index is also still quite a bit down. Continue to speak about Zip. So my current topic, second topic for today, and Zip, released their financial informations last week, and they did really well, and that was kind of expected. So that was definitely in line with the expectations, but it's really great to see that the company results are in line with the expectations and not falling short. They delivered an increase of 45% in transactions, which is great to see. The revenue jumped by over 175% to 253 million Australian dollar. And then the most interesting part, I think, was that they are finally getting into a stage where they can actually launch their product line in UK, which was planned for quite some time, but the start for that was now delayed. So we have quite a large market in UK that is still not covered by many of the buy now pay later companies, and Zip is certainly trying to get into the UK market. They started to build a team in UK to actually grow the brand and establishing their product in UK. So that's going to be really interesting to see. And we now have a quick look into the chart and compare it with the Afterpay chart. And you can see that Zip has certainly not done as well as the biggest competitor here in Australia, like Afterpay. And you also can see a bit of a support level at around the $6 mark. And that's also where I bought in. I bought into the share probably around here, just before it got up a little bit. But it's still, I think, Zip has certainly room to grow, especially in their share price and market cap. When you see the market cap from Afterpay, we are now almost at 30 billion Australian dollars, which is insane. So that's quite a lot. And you can see that the share price is coming down just a little bit, but that's obviously really interesting to see what will happen there. It's actually an investment that I'm not 100% convinced of that space, because I don't 100% like the product that they're offering. And to be honest, it was probably a little bit of fear of missing out to not be invested in at least one of the companies. But it's certainly one of my investment where I'm still questioning that a little bit. And I have been, and that's one of the stories that I like to tell is the worst thing you can do is selling out of stocks. And one of the best example is that I had an investment in Afterpay, and that was in 2018. I started to invest into the company at around $8 Australian, and so it has basically 10x'd since then. I still made a good profit. I sold at around 16 Australian dollars, so I made around 100% in really just a couple of weeks, which is obviously insane and incredible. So great performance there. However, when I now see the share price and think that I actually had a position in that company back in 2018, you can just not think about what you missed out on profit. But hey, that's how it is. That's probably just another great example of the worst decisions you make, not the buy decisions, but the sell decisions. Anyway, moving on and talking a little bit about the another two investments that I currently have in my portfolio. Another couple of investments that I'm really interesting to see what the near future and long future will hold. And this is one is Megaport, which is one of my worst investment at the moment. And I think it comes down to timing in that stock, because I believe that the stock overall and the product that they have and the market that they're in, that this has a lot potential. And when you see the market in US, the competitors in US, obviously they are much bigger, but companies that offer a similar product around cloud security, cloud connections, and they doing very well. Megaport is actually performing. This share price is not performing very well, but the company is growing pretty good as well. However, you can see in the share price that there is certainly they came down to a level where they are potentially, in my opinion, in the buy zone again, because I think it's a future-proof product. And there are certainly, when you want to have a long-term investment into that area, Megaport is certainly a company that could be on your watch list. So I got into the company. I got the position back in September, so not too long ago. My position I bought into at around 16 Australian dollars, and so I'm minus 20% now, which is obviously not great. However, it's a long-term investment, and I really like the product and the market that they are in. So I'm very confident that this will turn out to be a positive investment for the long term. Looking into my best performing stock, and that's obviously always great to see, it's Xero Limited. Xero is has a cloud software as a service product in the accounting industry. So they have an accounting product, and they sell that as a software as a service, which is doing very well. And it is one of the most established product here in Australia. And they are doing very well in Australia and worldwide as well. There's still a lot of room to grow into. The biggest competitor is QuickBooks from US, and they are competing on a very high level. And it's going to be really interesting to see which markets adopt which product more. So I think in Europe, Xero has great growth potential. Here in Australia, it's already, I think, the most established accounting software for small and medium-sized businesses. And yeah, my position, it's actually the second time that I'm holding Xero. I was holding the stock back in 2018 and sold it with a profit, and it was actually quite a good timing because at the time the price went down a little bit again. I used the market correction in March, April to establish a new position into Xero, and purchased in April my position, and I'm now over 84% in the greens with that position. And I'm not selling one piece of that company. I certainly think that there's still a lot of room to grow when you see that long term. However, if you see the current PE ratio, which sits at over 500, I think 546 at the moment, that's obviously insane, right? That's crazy. It's crazy expensive for what you buy, but you obviously buy the future with that company. And it will take a while until that company grow into the footstep that it's currently holding. But I'm very comfortable that that will be the case. So I'm still bullish long term for the company, and of course there will be situations and times when the market will decide that the price is too high. But overall, I'm very positive for the company. Yeah. Cool. Thanks for watching the video, and I will now, as mentioned, talk a little bit about my disclaimer. So I'm not holding a financial services license, and the information that you see here in this video is really just for informational and general information only. This should not be financial advice, and I encourage you to read that disclaimer in full. Thanks for watching, and I'm going to see you in my next video. Until then, bye.